morning. It's March 30th. It is another nice, beautiful day in the stock market. The futures look a little red today, but after the bull run that we had the last couple of weeks, was it a fake out, or are we going to continue the bull run? Well, yesterday during the market open, I saw the candle pattern on the SPY, and I didn't like the way it looked. It that candle pattern we call it an abandoned baby, and during the market I said it was a reversal pattern. So here we have it over here, where we had that same abandoned baby, and what happened after that pattern? Well, the typical retracement after you get a candle like that, this is a reversal pattern. And the typical retracement from the top of that candle to where it bottoms out, typically it's 3%. So when you look at when it happened in February, the market was at 458. If you multiply that by 3%, you would expect it to retrace to 444, and it did. It went exactly to 444. Then it came back up, made another abandoned baby. The second time it came down, it overshot the 3%. When it overshot the 3%, the market said, wait a minute, I went too far. Came back up to that 3% retracement, and then it made another leg lower. I don't expect this same scenario to play out over here. I think that a lot of this was a negative catalyst of Russia, and seasonally it was the correct thing to happen. I would expect a 3% retracement off of yesterday's top. Not in one day, maybe over a week. I would expect SPY, yesterday's top was 462. A 3% retracement would take us to 448. Some of the things that would make me make that assumption is if you look at seasonality, the last week of March, normally we are down. You could see it right here. The last week of March is not always a good week. It's typically a week. It shows a lot of weakness on that week. So a little retracement is seasonally correct. We have that. So my calculations are based on, we have here that line has been resistance before. Right here. That's at 444 area. That 444 area is where I would expect us to retrace to retest that support. That's a considerable drop. I don't want to go that low, but I think that that's where I would be a heavy buyer if we reach that 444. So this is one of the lines that I drew, that we have resistance here, we have resistance here, we had resistance here, broke through it, came back down, tested it at support, came back up, had the abandoned baby. Now I expect a 3% retracement, which would take us to 444, and we always like to have confirmation bias, and for that confirmation, I go from the bottom of the low on SPY on this most recent run, and then put a Fibonacci retracement to the top, and the 38.2 line has us at 444.33. So that does have us 38.2 line does have us skipping the 23.6. So what I would expect is to come down to the 38.6, try to come back up, get rejected, and come back down to the 44.3, and then continue our bull run. Hope this helps. These aren't written in stone, but this is what I look at to help me find my entry points, and I hope it helps you find your entry points. Have a